Well, good morning, traders. Welcome to followmetrades.com Saturday scanning session where we're going to try and find some great trades for the upcoming week. And I appreciate you taking time on a Saturday morning to log in here. And I'm going to do my best to make pretty good use of this time. And I'm Dean Jenkins, founder of followmetrades.com. And let's go ahead and jump right into this thing. First, make sure you can locate the chat box in the Zoom webinar platform. If you mouse over the little Zoom thing, you should see some tools pop up. You should see a chat box there. So make sure you can locate that, because as we go, we definitely want to make this interactive. Happy to take any comments or questions as we go along. And once we get into it, I'll be happy once I do some scanning, see if I can find some trades. I'll be happy to analyze any trade ideas that you have using my tools and techniques. So make sure you can find that chat box. Go ahead and find it now. Just type in where you're calling in from, city, state, country, whatever, just to make sure you can find that. And it's always fun to see where folks are calling in from. Usually we get people from all over the U.S., all over the world quite often. And Neela calling in from Bellevue, Washington, just up the road from me. I'm in Olympia, Washington. Man, we've had some beautiful spring weather here. A little bit of rain today, which is good because we got new plants in and stuff, so they need some water. But man, spring's here. It's nice. Zora's calling in from Toronto, and Donald from Toronto. So two of you from the same city. All right. Looks like you guys found that chat feature okay. So, hey, Dan, welcome. Calling in from Las Vegas. All right, I bet you got a little different weather there than we do. Probably getting warm already. Okay, well let's jump in. And as I said, go ahead and type in any questions you have as we go along. I want to make this as interactive and as informative for you as possible. So we're going to look for some trades, but finding great trade candidates, it can be like finding a needle in a haystack, right? There's over 8,000 publicly traded companies on the U.S. exchanges, and then hundreds of ETFs on top of that. All total, about 10,000 symbols in the U.S. exchanges. So, yeah, how do you sort through all that and find, great trade setup? And some folks get overwhelmed and they just focus on I call them the marquee stocks, right? The ones that are in the news, Apple, Tesla, Facebook, Netflix, stuff like that. But there's a lot more out there, and sometimes there's better trades on something you haven't even heard of than some of these, really familiar names. So it's good to look across the whole market and see if we can find some candidates. All right. So, how do we narrow it down, 10,000 symbols down to, a manageable list and uncover some gems? I'm going to show you how to do that. Okay. I'll show you how I do it. I'll share the trades that I find. And at the end of this, I'll extend an offer if you want to follow along with me each week with the trades I actually take. I run a subscription service. I send trade alerts to my subscribers. And so I'll show you how that works at the end if you're interested in following along. All right. We're going to look at live markets. I'm going to be looking for trade candidates. I'm going to point out the ones that I like. I'll even share a few trades that I'm in right now, and I'll analyze any that you're interested in. But I'm a trader. I'm not a financial advisor. I'm not giving financial advice. All trading and investing involves risk, and risk control has got to be used at all times. It's the key to success. One of the keys. Okay, about me, and some of you maybe are brand new here. You haven't heard of me before. So I'm Dean Jenkins, founder of followmetrades.com. And I'll turn my camera on for just a moment here and say hello. Good morning, welcome, glad you're here. And again, I'm Dean Jenkins, founder of followmetrades.com, but I'll turn that off so it's not a distraction. All right. So I've been investing and trading for over 25 years now. It started when I went to work for Intel Corporation. They gave us stock options, and we had an employee stock purchase program. And I joined in '93, and 4 or 5 years down the road, it was like, wow, things doubled and split and doubled and split and doubled and split. And all of a sudden that stuff was worth some money. And it's like, wow, there's something here. So got really interested. And during that time, I earned my MBA from the University of Washington, and learned the tools to be a fundamental trader, to go do financial analysis of various companies and look at all their financial statements and ratios and all this stuff. And, I applied that to trading, and I got real mixed results. Fundamental trading for, long-term buy and hold, it's certainly got its place and has value. But in terms of shorter term, trying to swing trade, got really mixed results out with fundamental because, basically you look at a great company and it should do something, but for some reason the sentiment among the traders changes and they take it the other way, right? So in about 2007, I got really frustrated, just gave up for a little while. But I couldn't stay away. It was too compelling. And I was just really lucky to get out of the market, go to cash before the '08 crash. But after that, I got back in and I got in some winning trades like, Bank of America, I got at $7 and it went to 12 and, a few other things like that. But it was stressing me out because even in a winning trade, because you don't have a plan, you don't know what to do. And, you got something like Bank of America that's just about doubled. And now you go, well, do I stay in it for more profit, or is it going to reverse? And am I going to give it all back? What do I do? So I got really interested in technical trading about 2010. I made a lot of mistakes, was looking for the magic feather indicator, the one thing, that would turn green and tell you about a great trade. It doesn't exist. But in 2012, I finally settled on the current trading system that I'm using, a handful of tools and primarily risk control. And I started getting consistent results. I'm going to show you what those tools are. And then in 2015, I launched this company, Follow Me Trades, where I do coaching, mentoring, and run a stock pick subscription, stock alert subscription system. So that's kind of my story, who I am. And for the the Follow Me Trades business, it's my homepage, followmetrades.com, and I publish the results that I've been getting for over the years. This is my results here, and they've been pretty good, beating the indexes, averaging 25 to ish, sometimes more, sometimes a little less. And those results are, if you're interested, the details of every one of those years is at one of these green buttons. You can click on it, go see every single trade I took, winners and losers, details listed there, and those are audited, third-party CPA firm. If I put it up on the website, say, this is what I did, it's real. I don't believe in playing games, right? And you can see I'm not claiming that you can take $1,000 and turn it into $1 million in 6 months, like some of these ads you're going to see, right? It's not true. It's a lie. All right, so just trying to keep it real. All right, so the results there. So a little housekeeping, and again, ask questions as you go. Feel free to do that. I'm going to explain the setups I'm looking for, right? If we're going to scan for something, we got to have some criteria. I'll walk through then how I filter down to a manageable list to look at. And I'm going to find some great trade candidates. And again, I'd be happy to look at any trade ideas you're interested in. I'll offer my analysis. Who knows, might find a great trade, might love something you're looking at. I'll summarize the candidates at the end, some actionable trades for next week. And again, I'll extend an offer at the end there if you want to follow along in my stock pick alert system. All right. The secret to success, according to Benjamin Disraeli, is to be ready for your opportunity when it comes, right? So, and the point here, I think, is that, when you're looking, we're going to scan the market for great trades. You gotta be ready. You gotta have some criteria in mind, what you're looking for. It's not really just point and shoot, right? You got to be ready. You got to be prepared. You got to have a plan, and we work hard to do that. Same thing, Louis Pasteur. In the field of observation, chance favors the prepared mind, and we want to be prepared and ready to seize an opportunity when it shows up. Here's some things that I've learned over the years after making many mistakes. To be a consistently profitable trader, you got to have a plan. And these three things are essential to your plan. You got to have, trade criteria, setups, what you're looking for. What are the criteria that would qualify a trade, right? And it's got to be more than, some news article or your neighbor over the fence giving you the tip on the latest hot thing, right? Or the coworker. You got to have some real criteria. And in what I want in a trade setup is a high probability outcome. And I also want a great reward to risk ratio, that if I'm right and the trade goes well, I will make a lot more money than if it goes wrong and it fails. Trades are going to fail. That's a reality of trading. So I'll talk a little bit more about how we calculate and come up with a reward to risk ratio and the setups. You got to manage risk. Some trades are going to lose, right? Can't be right all the time. No free lunch on Wall Street. And so you got to, if a trade's going to lose, you got to control that. Make sure that that's a small number that's not a big setback, right? And then you got to manage a trade once you're in it. Once you pull the trigger, you place an order, and you got a position in a stock or an option or something, some emotion can definitely set in. And what you don't want to do is make decisions based on emotion. You want to make decisions based on a predetermined plan, a script that you follow, right? So that regardless of the emotion you are experiencing, you can execute the trade in a disciplined way. So here's the tools I use. I use Dow theory, looking for a proven trend. I use Ichimoku Cloud, and I use Elliott Wave, and I just combine all these. These are all distinctly different studies, and what I do is overlay them on each other and look, again, for a high probability setup. If they're all in agreement, that's really going to help me. And again, the overriding criteria here is what I want is a high probability outcome and a great reward to risk ratio on the trade setup. And let me I'll show you a real trade that we just took Friday, right? So, we don't want to spend all of our time here in PowerPoint. We want to look at real charts, right? And so here's an existing position we're in. This is BLL, Ball Corporation. And you go, well, that's a boring company. Yeah, but making profit is not boring. And I mark my charts up. You see this red line is my stop. This blue line is where I actually got into the trade, and this dashed green line is my target. Now I've moved my stop because prices moved, but I got in at this blue line at 90.53, and here we are a couple days later at 93.98. I got a target at 101. Okay, and so when I initially got into this trade, my stop was down here at this low. All right, and the distance from my entry to my stop versus the entry to my target, you can see the target's much bigger. That's a high reward to risk ratio trade. So that's what I mean by that. And that's a good trade. We just took a new one on Friday. We took actually two longs. We went long on CRM and we went long on LRM. And CRM is looking good. We took our entry. It didn't jump yet, but that's okay. We got, we're going to be in this thing in a couple of weeks, and we got a target on CRM at 265. But you can see here the red line is my stop. That's where I'm going to close the trade, right? If price goes down to this red line, I'll close the trade. And that the stop doesn't imply a stop loss market order, right? Some folks worry about, the market makers are going to see my stop and go hit it. Some little laughing gremlins. The stop means I've got an alert set up, and if price hits this level, it gets an alert. I'm going to close the trade. So I took my entry here. So the distance from my entry to my stop is pretty small relative to the distance from my entry to my target. And the target's based on some tools that I'm going to show you. It's a simple version of Elliott Wave. Excuse me. All right, so that's a quick look at some real charts, right? And like I said, we don't want to exist totally in PowerPoint here. Keep it real. So I'm using Dow theory, Ichimoku Cloud, Elliott Wave all together. And so here's a quick view of Dow theory. Charles Dow, founder of the Wall Street Journal and the Dow Jones Company. Back in the 1890s, he wrote a whole series of Wall Street Journal editorials outlining his observations on the market. They are still valid today. It's called Dow theory. And a part of that he wrote was trends. What is a trend? Well, a bullish trend is a series of higher highs, higher lows, higher highs, higher lows. And as long as this pattern continues, it is an uptrend and it's continuing. That's really important. I talked earlier about being in, a trade like Bank of America back after the big crash. And you get in it and, I bought it at 5, went to 12. And you go, wow, when's the trend going to end? When should I get out of this thing? Well, these tools for Dow theory can help you with that. Because price doesn't move in a straight line. If you look back at, CRM, here was the big uptrend, Elliott Wave 3, right? Higher highs, higher lows, higher highs, higher lows, right? That's how price moves. It does not move in a straight line. So, you get in it, it goes up and then it starts pulling back. You go, oh no, what should I do? Well, that's why we have stops at prior lows. So if the trend fails, we close the trade using Dow theory. Downtrend's the opposite, lower lows, lower highs, lower lows, lower highs. And you can use these to confirm when a trend has begun. According to Dow theory, a trend has begun when a prior downtrend or a channeling market makes a high, higher low, new high. The trend has begun, and it continues until it no longer puts in highs, and then it takes out previous lows. What we do is we put our initial stop here, and then here, and then here, and then here, and then when it finally hits that final stop, close the trade. Can't call the exact top, but you can tell when the trend has changed, and you can get out. And I take partial profit along the way. Downtrend's the same way, low, lower, high, new low. Trend begins, lower lows, lower highs, lower lows, lower highs. Doesn't put in any lows, goes up, takes out prior highs, trend's over. Pretty good, right? Pretty simple. And I remember when this was first pointed out to me, I go, well, that's so obvious now that I see it, right? But, if you don't, if not, you don't know it, right? I use Ichimoku cloud. You can see it's on my screen here. It's the shaded cloud area, and there's also the Tenkan Kaijun, fast-moving, slow-moving averages. Ichimoku cloud is a combination of some moving averages. It's a little different way of calculating and presenting moving averages, but at the end of the day, it is moving averages. But what it does is it gives you a trend change confirmation, right? When price goes above the shaded area of the cloud, that's a pretty good indication that a trend has begun. And when you combine this with Dow theory, like you look on this chart, right? You go, oh, look, we had a little bit of a channel going on here, and we had a high, higher low, new high as price came up above the cloud. Wow, two indicators telling us that we have an uptrend beginning. That's helpful. And then along the way in that trend, it's going to predict in uptrend support areas where even as price pulls back with Dow theory, right? The thicker the cloud is, the higher the probability of support, and that the uptrend will continue, not break down through it. And then as the cloud narrows, then the probability of breaking through and a trend change is there. The guy who developed Ichimoku cloud was named Goichi Hasada. He was a Japanese journalist, and he worked on this in the 1930s. And then Ralph Nelson Elliott, interestingly, was also working on Elliott wave in the 1930s. And what Elliott said was, hey, it looks like price moves in impulsive and in corrective waves according to crowd psychology, or just shifts in optimism and pessimism, and its natural sequences and waves, and that it moves in some fairly predictable ways. And so here's the idealized pattern for Elliott wave, and the typical pattern is 5 waves, right? Wave 1, 2, 3 is the 1 and 2 are the beginning. 3 is the biggest move. Typically, it's an impulsive move. After a big impulsive move, there's typically a correction, and then a follow through with the original trend into a wave 5, and then afterwards some kind of complex correction, which is hard to trade. So what I'm looking for is to trade a wave 3 with a new trend beginning, if there's enough profit in it, a wave 4 correction, and then after wave 4 correction, try to catch a wave 5. And you can see this kind of in real terms on like this trade I told you we just took, CRM, Salesforce long, right? This is what it looks like in real life. Here's wave 1, 2. This whole thing is 3. This correction is 4. And now look, high, higher low, new high, breaking above the cloud. Oh, this looks like wave 5 going on potentially to new highs. That looks roughly similar to that. Right? We just keep it simple. You may have seen other applications of Elliott wave that are super complex with all kinds of mega grand micro cycles and all this stuff. I don't do that. We're just looking for a big move, a correction, and a follow through of the big move eventually. That's it. And it can go up or down. You can flip this thing upside down and it works exactly the same way down. And we can predict with reasonable accuracy, once we see a wave pattern emerging, we can predict it with some surprising accuracy. I'll switch to a clean chart and I'll show you this real quick on CRM. All right, so I told you here's the big no indicators just so we can see it, right? Here's the move, right? There's wave 1. There's wave 2. This is wave 3. And once you see the wave 3 happen, you can predict where wave 4 is going to go, where it's going to correct to, right, using Fibonacci retracements. And these 2 blue lines are the target zone. You go, man, it's amazing. It went right into it. And now we got wave 5 starting, high, higher, low, new high. We saw the Ichimoku cloud, right? We were above it. And now we use Fibonacci extensions, and we can come up with a target zone for where wave 5 is predicted to ultimately go. And for CRM, it's between 296 and 356 up here, new highs above the all-time high. Cool. It's a simple application of Elliott wave. And there's some objective tools we can use. It's not guessing, it's probability. It's not certainty. You know, there's no certainty in trading, but I think it's cool. We get excited about it. All right. Risk management. So no matter what indicator set you use, I'm showing you the tools I'm using Dow theory, Ichimoku cloud, Elliott wave. You can use other indicators. Some people like MACD, RSI, whatever. Those can work. People make those work. But regardless of the indicators or the setup you're using, you got to have risk control. You got to recognize that any trade can fail, right? Any trade can lose. It can turn around, go the other way. And so with that reality, what we have to do is say, how much am I willing to lose on a trade if it does go the wrong way? And I got a formula for that. And it's no more than, for me, it's no more than 2% of my account, right? So if the trade's going to fail, and say I'm trading a 100K account, right, the max I'm willing to lose is $2,000 on any given trade. I don't want to lose it. That's the max I'm willing to lose because I could continue to trade. It's not a big setback. And as long as I maintain good trading statistics, a good win ratio, payout ratio, a 2% loss is, we can take that in stride. You don't have to take the minimum or the maximum. We can sometimes, in a volatile market or a choppy market, dial that back to a 1% risk. And people often get confused when they hear a 2% risk. They think that implies I'm going to put 2% of my capital into the trade. That is not true. What it means is I'm not willing to lose any more than 2% of my account on the trade. I put a lot more capital than that into the trade. So I got some formulas for that, and for my subscribers, that's actually built into the alert. So when you get a trade, the risk levels and suggested shares to trade for your account size are included, right? So pretty simple math. You take the difference between your stop and your entry, that's your loss per share. You divide it into the max amount you're willing to lose, and that gives you the number of shares to trade. All right, you got to manage trades. Well, you can get into a great trade setup. You can have the correct risk management, position sizing, and then you can still lose money. So you got to manage the trade correctly. And that means taking profit at the right time, adding to the position strategically under the right conditions. And then you got to stay with the winner. You got to let it run for as long as possible. The math of trading is we're not going to win every trade. So we need the winners to be bigger than the losers. And just think about the math for a moment. If your average winner is $2,000 and your average loser is $1,000, what win ratio do you have to be profitable? 50%. You can lose half your trades, and as long as your payout ratio is bigger than, is 2 to 1 or greater, you'll be a profitable trader. And 50% win ratio is not that hard to get. And I think we can do better than that. I think we can get up into the 60s or 70s. And if we do that, we got a 2 to 1 payout ratio. We're going to be pretty profitable traders. But we got to manage trades and stay with them. In order to get big winners and have a big payout ratio, what you can't do is scalp the trade, right? Like I showed you, we're in BLL. I've been in it for a week or something, right? And it's in profit. So here it is, BLL. I took it long at 90.53. Here it is at 93.98. I could have closed it a few days ago and took a win, and it would have felt good in the moment, but I would have undermined my system because that caps it at a very small winner. And if we get some small losers, small winner, small loser, small winner, we're just going to be break even. We got to let this run, right, and be as profitable as possible, and that's going to help our overall trading P&L for the quarter, for the half year, for the year. Hope that makes sense. And then of course we got to close the trade at the right time. There is a point where you got to exit the trade. All right. And I trail my stop. I showed you according to Dow theory, right? We put an initial stop at a support level. A Dow theory, you know, in an uptrend, we got a higher high, higher low. We put the stop at the higher low, and then as new higher lows are established, we trail our stop up and ultimately hope to get up to the target zone and then take it out on the final stop. All right. I already showed you a couple current trades, so we covered that part already. So let's talk about finding trades. How do we go about finding trades, right? First thing I do is create, you know, if I'm going to go look for trades and I want to get in the market, take some new positions. First thing I want to do is just go, what's the big picture? What's going on in the financial market, you know, and in the world that would affect the financial market? I just want to step back and, you know, look through the news, look at what economic reports are coming on. You know, what's going on? And so I do that. And then from the big picture review, I create what I call a thesis. I think this is where I should go looking in the market based on the big picture. Where are the opportunities going to be? Now that thesis, you know, in the scientific method, you know, a thesis is a statement you make that you may believe to be true, but it has to be proven. Right? So I make a thesis statement. It makes us go look at a certain area of the market, and then we see if there are opportunities there that meet our criteria. And if not, then we have to come up with a new thesis and go look in a different area. I use my thesis hopefully to narrow a list down to some good looking candidates, and then I walk through the charts and look and I take my trade setups, right, and see if anything meets my criteria or is close to it. It's unusual for me to sit down and go, okay, this trade is ready to pull the trigger right now. Typically what I find is something that's almost ready, and I'll put it on a watch list. I'll set an alert, and then if the alert hits, I'll go back and look at it, and if it looks good, then we'll pull the trigger on it. Okay. So I'm going to walk through. We're going to try and find some trades, and then I'll be happy to look at any ideas you have as well. Okay. So what's the big picture right now? Well, the index is, you know, very recently put in record highs. We had a short-term pullback this last week, and the market didn't like the news about the very large capital gains increases that the current administration is proposing, nearly doubling the long-term capital gains for high-income folks. So the market didn't really like that, and it pulled back a little bit. We got the infrastructure deal, you know, pending. That's going to take a while, probably not until this summer before any legislation really hits the table and, you know, any action will be taken, but you know, it's on people's mind. It's a lot of money in play. The FOMC meeting, Federal Open Market Committee meeting, is coming this week. They set, you know, Fed policy. So far, they've signaled that they will tolerate more inflation than normal, right? So we'll see if they change their stance at all, right? Because the tool they have to fight inflation is to raise interest rates. And, you know, the last time rates went up just a little bit earlier this year, the market reacted pretty strongly, right? And Neela's asking what alert, and I think you're referencing, you know, when I talk about having a watch list. What you do is I use TradeStation. I got a watch list here, and you know, say AMD. I got a watch on that. I go, hey, if AMD gets up to, I don't know if you can see the little flag, up to 84.86, I'd be interested in it for a long. And I'll pull the chart up, right? I want to see AMD break out of this little consolidation area at 84.86. So if it does, then I might be interested in a long, because that would be a high, higher, low, new high. But we don't have a new high yet. So what I want is to be notified if AMD goes above it. So TradeStation will send me a text message if AMD goes above 84.86. That's what I mean by an alert. All right. FOMC meetings. That's a big deal. That could move the market. We don't really have any other major economic reports coming out next week. We are in the middle of earnings season. We're getting overall positive results, but there's super high expectation for earnings. And if you notice, like the banks led off and they had really, really good results, and they didn't move up very much. And then some companies had weakness, like Netflix had good earnings, but the subscriber count was dropping and the outlook didn't look good, and they got crushed. So there are very high expectations for earnings. Gold has been rallying, and you know, the question here is, our investors, with the market at record highs, are they wanting to lock in those gains, maybe seek, a risk off position? And some people, it's funny, if you pay attention to the news, if you're a news junkie like me, we're considering that maybe Bitcoin and cryptos were the new place rather than gold. But you can see, gold was up over the last couple of weeks, and here's Bitcoin. That's a really, really big drop. So that may not be the risk off position that some were wondering about. Sector rotation was happening. We had money as interest rates started to go up. Money was coming out of tech into consumer, staples. It's kind of changing. Money's going back into tech, and there's a lot of people, fear of missing out. They have this tension, gosh, I like the gains we've gotten on the indexes and my mutual funds. I don't want to miss out on future growth, but I don't want to give any back. Right? Fear of missing out, but don't want to get burned. So, amongst all this, there's really no big catalyst at the moment, right? We're just waiting on a bunch of stuff. And the conclusion, I think individual stocks, short-term plays are the focus right now. And we want to watch the indexes closely. The indexes have been going up for a very long time. And trees do not grow to the sky, and indexes don't go up forever. I'll bring up the SPY or SP 500. This is more than a 1 year, pretty much straight up, a couple little hiccups along the way, but it's all higher highs, higher lows, higher highs, higher lows. There will be a correction. Will it be this week? Probably not. Will it be this next month? I don't know. But we can watch. We'll watch for the pattern, right? When a correction happens, you get a warning. We get a low, lower high. Oh, look, we were able to trade this last year and made a ton of money. And then, the trend changed, high, higher, low, high. Okay, we're going along, right? So we'll watch. And if a correction begins, we'll be poised to, the corrections, it goes down a lot faster than it goes up, and it can be pretty dramatic. And actually, if you're on the right side of it, it can be pretty fun. So that's my big picture. That's, what I'm going to approach scanning with. I'm going to be looking at individual stocks, short-term plays right now. And so when I'm looking for individual stocks, because sometimes, your analysis would lead you to a particular sector. And right now, I don't think there is a particular sector. So I'm just going to look for individual stocks. And so what I'm going to do here is I showed you my trade tools, my trade setups. What I'm looking for is a trend change. I want to see that a stock was doing something and now it's doing something different. And so I can scan for that. And so what I've done, I'll show you the criteria for this particular scan. So what I said in this scan, maybe letters are too small for you to see, but I'm using the scanner built into TradeStation here. But what I told TradeStation, go find stocks that are greater than $2. So I don't mind trading a low price stock, but I'm not going to trade, penny stock. So greater than $2. I want it to be highly liquid. I want a 10-day average volume to be greater than 1 million shares a day. Okay. So that means it's, shares are really trading hands. I want a market cap of 1,000 million or 1 billion, right? So I want real companies, even if the price is low. And so that's an initial filter just based on that criteria. And then I have it calculate some indicators. I want price to have crossed the 200-day moving average less than 3 days ago. And I want price to be within 5% of the 200-day moving average. Okay, 200-day moving average is probably the most indicator used by the most traders in the world, right? And it's a long-term mean, and quite often there's a price reversion to that mean. And so it's an important line, and you'll see it on a chart. So I ran that scan, and it scanned 10,000 symbols and came back with 35 symbols that currently meet this criteria. That's awesome. And these could be long or short, right? But what happened was these, met my price criteria, met my volume criteria, met my market cap criteria. And then they had something happening on the indicators in terms of crossing the 200-day moving average that is new. So that's all I was looking for, right? So what I'm going to do here is now apply this to a radar screen. I'm going to take paste these symbols in, and now it's going to tell me where it's at on the 200-day moving average, and it's also going to tell me where it's at on the Ichimoku cloud. So now I got two studies. Right? There is no scan or indicator for Elliott waves. We got to look at a few charts, but what we can do is observe that whether it's above the 200-day moving average and it's above the Ichimoku cloud, that means the indicators would be in agreement, right? If they're not in agreement, there's a little confusion. And I can also sort this and look for anything. Wow, this is new, right? This KMB is below the 200-day moving average, and it just went below the Ichimoku cloud. Wow, that looks like a downtrend, right? And it was down 5.86% on Friday. So I can link my chart here. I've got it linked. So what I can do is click on KMB, and it will load that chart. And I can look at it really quick and see, does this meet my criteria in terms of an Elliott wave? Well, here's a big move up. That could be a 3. This is a 4. This down move is approaching prior support. It's a big gap, you can see, obviously. And it's below the 200-day moving average, just crossed under it with the gap, and it's below the Ichimoku cloud. That's why it came up on the scan. But I don't really like it. It's approaching prior support, and it's not a super clear Elliott wave presentation. That's okay. It's worth looking at. It only took me a few seconds. We got one that is newly above the Ichimoku cloud. It's above the SMA, and this is ADT. Okay, and they had a big day on Friday, 4%. Okay, so ADT, you can see it's in a bit of a channel here. There's an upper boundary, a lower boundary. Obviously, I've looked at this one before. Now, we do have a nice move off the bottom. We got a high, higher low, high, higher low, new high. It is above the Ichimoku cloud. But our target for this, we're going to be concerned, it's hit it here, it's hit it here. We got a gap, which is a resistance area here. So there's a really good probability this is going to stall at this $10.57 area. So your target would just be from current price to there. And that may not be enough profit on something like this. Although you could put a stop here, right? Could put a stop here. That's a pivot point. So the risk is here to here, and the reward is here to here. So that could be a short-term play on ADT, but it's not my absolute favorite. Nokia. Oh, that's interesting. Just went above the 200, above the Ichimoku cloud. It's above the 200-day, right? So Nokia, obviously a low-price stock, and right, used to be everybody had a Nokia handset in their hand. Now they don't. Everybody's got a Samsung or an iPhone. All right. So Nokia, is this a good play? This is it's in a really tight channel, and it's such a low price stock that any move is going to be, every penny makes a difference. There isn't a move off the bottom, high, higher low, new high, but it has some prior high areas here and here. I just kind of took an average. It could definitely stall. It has several times. So unless it got above here and really started a trend, I wouldn't be interested in that one. You may be picking up on the fact that I'm very picky, and I think that's okay. We got lots to choose from, right? We don't have to go force marginal trades. Let's look at BE, Blue Energy. Now this is an incredibly orderly chart. This is a really good looking chart for me in terms of Elliott wave. What catches my eye is we had a big orderly move up. We had a correction, and now it looks like it's starting up again. This is what I'm looking for. But we have a problem. We are looking, remember Dow theory, we're looking for confirmation of a new trend. And a new trend is high, higher, low, new high. Well, right now we got this correction, low, lower, high, low, lower. This is a beautiful correction, perfect. We're looking for a high. We got a high. And now we want a higher low and a new high. We don't have this yet. This is going to be an awesome setup. So this is worth, keeping on kind of a long-term, go check in on it once a week kind of thing. But it's not ready to trade yet. And it'll take a while. And by the way, this correction, I've looked at thousands of charts, so I almost don't need the tool anymore because your eye gets kind of calibrated. But I can tell this impulsive move corrected perfectly into this Fibonacci retracement zone, 31.8 to 68.2. 61.8, sorry, 38.2 to 61.8 Fibonacci retracement, right? It was a perfect, this is a classic Elliott wave, right? And if this plays out and proves a trend change, right, and over time this cloud will narrow, and what we want to see is this high, higher, low, new high, and we want to see it break above the cloud. And we want to see the momentum oscillator turn green. That's worth waiting for, but it's not ready yet. Okay, so that's an awesome one. CHD. CHD is below the moving average. It's in the cloud. Okay. Church and Dewalt. So 3 up, 4 down. Boy, look at this. Real conflict going on. We do have this high, higher, low, high above the cloud, higher, low, right? But we got it stalling at these prior highs. If it can break above this line, 90.16, then we got to go, right? Then we got to go. And that's worth putting an alert on. Putting on the watch list, put an alert at, let me fine tune this. So the absolute high, really got to zoom in that little consolidation area. I think it was this price bar. Yeah, it was. You can see the wick. The high was actually 90.24. So I want to be notified if it gets above 90.25. If it hits 90.25, that tells me put in a new high. I'll come look. I want to get that as soon as possible, right? So that's worth putting on a watch list and having an alert set. It's a nice wave 5 presentation. And, the target zone is these green lines, 108 to 123. And even a conservative target, if you said, well, what if it failed at the wave 3 high here? Would that still be a good trade? Well, yeah, it would, right? Because that would give us 90 to 98, right? That's a 9% move roughly, right? That's worth taking. And it's a nice clean chart, so that's a high probability, and it could go higher. So that's a decent one. CRISPR. CRISPR's above the 200. It's in the cloud. Same deal. Beautiful wave 3, perfect correction, consolidating. And this, by the way, this consolidation is getting narrower and narrower, right? Kind of like this. This is called a wedge. Like that. When it breaks, it could break out with a ton of energy. Whichever way it breaks out of this wedge or flag, they call it, it's the way it's probably going to follow through for a while. And the probability here is a breakout to the upside. So if it does that right here at about 130.68, that's going to be an awesome trade. I'll take that one. So CRISPR long if it triggers. And you notice how we're mostly generating watch candidates. And I like that. I like having a list and then you sit back and wait for them to qualify. If you sit down and go, okay, I'm going to find me a trade, or I'm going to place an order today before I get up, you'll often find yourself compromising and taking weak trades. So if your goal, if you go, I'm going to find me candidates and then put them on a watch list and wait, you'll be more disciplined about your scanning. DocuSign, that's funny that it's on the list. We took that long already. It looks good. How about EDU? EDU is below the two, so this could be a short. Okay. Well, it went just above the 200 and it came back down, so that's why the indicator triggered, right? This I wouldn't take this short. It's clearly in a correction, but using our Fibonacci retracement tools, we can see it's already been into the target zone. So what we're waiting for here is the next is a move up, and it's not ready. Right? High, higher, low, new high would be what we're looking for, and it ain't there. Kellogg. I may want some cornflakes. So it is below the 200-day moving average. That's interesting. Aha. This could be a short. This could be. Because the retracement here, this was chaotic, and we had a big move down, a big move up. This over 100%. This move canceled this move. Okay, and now this was too deep to be a retracement to this move. I'll prove it to you. Right, if it goes below, the retracement goes below 76.4. It's too deep, and this red line is 76.4. Again, you look at 10,000 charts. Pretty soon you can just see it, right? So it went too deep. So that's okay. What that means is this down move is the new impulsive move. This is the wave 3, and here's wave 1, 2, 3. Perfect retracement up, and now we're looking for a wave 5 down. We got a low, lower high. If we can get a new low, we got a short on Kellogg, and the target for Kellogg will be new lows down here in this target zone. That could be pretty good. Well, that looks pretty good. We got some trade watch list candidates. We don't have any yet that are like, go place the order Monday morning unless the trigger hits. Let's look at a couple more. Lemonade. Right, big huge move up. The retracement was too deep. Guarantee it. Below the red line. This is the impulsive move. You could get a retracement up at this point. Target for that retracement up is up in here. If it breaks out of this consolidation, that could be a trigger. We got to wait for that to happen. And then there's a target up here. Procter & Gamble. Sorry, I had to go on mute there and cough. I think I'm better now. PG is actually a long, big 3 up, 4 here, looking for a trigger here, and it could be good. Right now it's below the 200, so it's really weak. All right. Now I mowed the lawn yesterday, and allergies are kicking my butt. So we'll hang in there. All right, well, so we've gone through 11 charts here and identified a really good couple of watch list candidates. What I'm going to do is I'm going to go really fast and see if anything is ready to trade right now. I'm taking my time to explain these to you. Once you've been trained and you've done this a million times, you can see this stuff really fast. That's ugly. Oops. Come on. Okay, I don't see anything yet that's like, go pull the trigger. It's all watch list. Netflix, they got crushed, man. Look at that. Whammo. But notice this line of support here. I would not try to short it here until it breaks this. And this isn't surprising because what's happening in the market right now? The market is not moving in big ways, right? If we look at the SPY again, right? Last week, what's it doing? Trading in a very narrow range. So this fact that the indexes, I think everybody's just kind of, we made some new highs, we're waiting on a bunch of big breaking news for the FOMC, for the infrastructure spending, blah, blah, blah. So the market's kind of going sideways in a narrow range. So it's no surprise that most of the stocks are too, and that nothing's really triggering. That's all right. You just got to be patient. AstraZeneca. Look how this predictably reverses off the 200-day moving average. You had a high, you had a high, higher, low, new high, broke the cloud. But when you observe that it really bounces off the 200. I wouldn't have taken that. CRM, I love that, comes up on the, so CRM and DocuSign come up on the scan, and we were in both of those. Beautiful. Oh, in fact, we took CRM. We did not take DocuSign, but it looks really good. But it was coming up on this high. So this one is a good watch list, DocuSign. If it breaks this, you got a nice trade. Right, look how it did break above the 200 here. This is good. Just want to clear this hurdle. Right. Okay, we did take CRM. We are long CRM. That's awesome. For solar, let me look. Look at that. So we do have high, higher, low, new high. It's above the 200. It's above the 50, which is this lighter one. It's above the cloud. Look how it responds. This is a high resistance level. This is a resistance level, and it hit it again. If we can get a candlestick to close above this, this looks really good. This is the best chart we've seen today. Okay, so definitely want to make a note of that one and set an alert on for solar. Okay, Grubhub. Yeah. Lululemon. Okay, they just broke out. That's kind of interesting. So that one, that looks good. That's an expensive one. Gosh, they're at 40 bucks. Okay. So we have a pretty clear wave count, good correction, high, higher, low, high, higher, low, high. It's above the 200. This isn't a major resistance area. We got positive momentum. We're above the cloud, we're above the moving averages. This looks good. This one is one of those ones where you could make a case. Yeah, pull the trigger right now. Monday at the open, if it's in that range, could be good. One thing we want to check is, when are they going to announce earnings? Because what we don't want to do is go take a position Monday and find out, oh, they're reporting earnings at the close. And you don't really want to hold a swing trade through earnings. And they've already announced. So their next one is in June. So obviously they've already announced on this cycle. Okay, so we got a trade ready. Everything else we found today was a watch list. This one's a trade to take right now. So where would we put our stop? We're going to put it at this low. Remember? High, higher, low, new high. So what is that exact value? $314.83, so we're going to go 82. $314.82. I like to color my line, so when I come look at this chart, it's just super clear and instantly obvious what I'm doing here. Okay, so there's my stop. This is red line, right? My entry, we can't take it today on Saturday, but for now, we'll use Friday's closing price. Monday, we'll come back and look at it and see if it still makes sense. But as of now, that is 340.98. And my target is going to be right by the target zone of this prior high, right here. So 390, we'll call that 398. Okay, Now we can just eyeball this, and we want to know what the reward to risk ratio on the trade is. The risk is the blue to red, this distance, how much I would lose per share if it hits the stop, and the reward is from the entry to the target, right? It's 2-to-1 roughly. It's great. And I would trade this one with a option contract, right? I'm just going to go buy an in-the-money call that has an expiration date that takes us out 60 to 90 days and gives us the same time to play out. So that's a nice trade setup right there. Lululemon. Probably not even saying that. Lululemon. There we go. Okay. Hey, man, look where the time went. Go ahead and give me any symbols you would like to look at. Eric's typed in one here, SWK. So I'll look at that. And if you got a couple, we'll walk through them and offer a quick analysis on anything you like here. So SWK, Eric, this was a long we had before, and we ended up closing at break even because earnings were coming up. But now it's past earnings. This is Stanley, Black and Decker, Dewalt, right? It's a nice long trade. This is not a dramatic fast mover, but it's very orderly. Here's your wave 3, here's your wave 4, here's 5, right? 5 heading up. It's got a target way up here at 237. You're just going to have to be patient and let that play out. And if you were to take this long, you would want to have your current stop, at the prior low, right in this area. This is a nice little pullback and consolidation, about 200 to 23. And I think they announced earnings early in this cycle and we're out. So you may have some time. Let's just confirm. Oh, wait. Erase all of that. We traded that in the last cycle, April 28th before the open. So you do not want to take this on Monday, right? The 26th, you're only going to have 2 days. Wait for earnings and then see if there's still reward to risk on it. Okay. So that's the deal on SWK. Okay. Well, like we said up front, finding great trade candidates can be like a needle in a haystack. But we found some good ones. We found Lululemon ready to go right now, Monday morning, unless it gaps crazily one way or the other. And we got a nice handful, about 6 really good watch list candidates. So I think that was productive, right? And I explained how we do that, how we started with 10,000 symbols in the U.S. exchanges. It came down a handful of really nice watch list candidates and one trade ready to go. Remember, these things are essential. You got to have great trade setups. You got to have risk management. You got to have trade management once you're in. Do you guys believe that? Do you agree with that statement? Right? You got to have all 3 of these things. Maybe type in a yes, click the little button, raise your hand if you are in agreement with those statements. Eric says yes. Hard to disagree with, right? If you're going to be successful as trading, of course you don't want setups, risk management, trade management. Right? Absolutely. Okay. How many of you are excited about some of the watch list trades? Anybody thinking about taking Lululemon on Monday, putting some of the other ones we got identified on a watch list? I said First Solar looked really good. You excited about some of those? Think they look good to you? Maybe a little unsure how to act on, what to do about those trades. Maybe you feel like this guy here. It's like, wow, that was a ton of information, right? Intrigued, but overwhelmed. So I'd like to spend a few minutes going over a special offer I said up front that we would, I run a stock pick subscription service. Some of these trades we're actually going to take, and I'm going to trigger them and then publish them to my subscribers. So I run a stock pick subscription service, get really good feedback. We get good results. I showed it up front, full transparency, audited results. We don't play any games here. So you can join that service. Right? And then, what you get with the service is great trade setups, risk management, trade management, detailed trade consultation in a live trading room, one-on-one consultation and ongoing education and some tools to help you trade. So I'm going to offer you that. The list price is $127 a month. I'm going to offer you a discount this session. You can take a trial to the service, stock and option pick service, for $37 for 30 days, and then it'll be $97 a month after that on an ongoing basis. So that's a discount. And in that 30-day trial, there's a money back guarantee. Most people go, yeah, this is great, and they stay. Some folks, it just wasn't a good fit, wasn't what I expected. And so I offer 100% money back guarantee on request, no games, no questions asked, no hard feelings. All right, so I just posted a link in the chat box if you'd like to take me up on that offer, give it a try. It'd be fun to have you join, right? Well, what do you get? You get a watch list of the potential trades, just like we did today. You get alerts via email, and I have an app that you can put on your iPhone or Android, and it gives you an alert when we're taking a new trade. Right? You get the exact details of the trade, the entry, stop, the target. Most of the trades can be traded either going long or short the shares or with an option contract, and I provide my option contract selection for every trade. You get alerts when we make a change, move the stop, take the profit, close the trade. You get access to a live trading room Monday through Thursday. It's 30 minutes after the market open. We're there for 30 minutes. And you can, attendance is optional. We provide that service. A lot of traders like it and like to participate and log in, but you're going to get the alerts either way. So, and if that time doesn't work, but you're interested, we record it, both the full session and a very short recap as well. You get a weekly live chat session Wednesday evenings. If you can't make the morning, a chance to review the trades, look for new ones, and answer questions. I offer a one-on-one consultation when you sign up, get you off to a good start, and answer any questions. And you get some risk management, option trading tools, and training included with the subscription to help you act on the actual alerts. Right? You get ongoing support and training. Roberto says, do you think within a month he could break the 25K barrier to become a full-time trader? Quitting your day job and trading full-time is an aspiration that many people have. It can be done. I don't know what your experience level is, Roberto. I don't know how much capital you're working with. So for me to make that kind of promise would be irresponsible. Okay. And there's a lot of people in this market making claims that, hey, you sign up for my deal and you can quit your job and you're gonna make 10 grand a month or 25 grand a month, like clockwork. The market's an ATM, it's gonna go print money for you. You guys know it's all total BS, right? It's all hype. It's not true, right? Being successful at trading is totally possible. It's hard. It takes discipline. It takes work. It takes some time to master the skills. If you're following my trades, right, you get the benefit of my experience, right? But we're not going to get rich overnight. We're going to book consistent, nice gains, right? But you're not going to turn 5,000 into $1 million in 6 months, right? So I just want expectations to be clear for folks. All right. So that's what you get with the service. Oh, but wait, there's more. I showed you I use Ichimoku Cloud. I do have a course listed on my website for, it gives an in-depth explanation of Ichimoku Cloud, and then it shows the proprietary settings and approach that I use in using the tool. It's $247 on the website. It's a good course, good feedback on it. If you take this, excuse me, these allergies are killing me. If you take this trial to the stock and option pick service for 30 days, I'll include the Ichimoku Cloud course for free if you do it this weekend. Okay. So that's it. Any questions before we go ahead and wrap up? I know Saturday, people got stuff to do, places to be. So I'm happy to field any questions. I'll hang out here for a moment, but I definitely want to say thank you. Thank you for your time. I hope you found this useful. We did record it. We'll send the recording out. And if you'd like to take me up on that offer, for the service. Come check it out for 30 days. Be great to see you. We'll be there Monday morning in the trading room, and you'll get a link to book a one-on-one consultation and get to know you. Get off to a good start. Okay. Yeah, and the recording's going out to everybody who registered. So it takes an hour or two to render it and get it sent out. Okay, I'm going to go ahead and go on mute. Finish sneezing here, and I'll just hang out. I'm going to stop the recording now.